If you're trading by hand, eventually you'll be outcompeted by ML models. It's just reality. It's an iteration, right? It's part of the ever evolving process of building a system like this. There's nothing wrong with by hand traders. There's a lot of really good by hand traders. They use underlying systems. They have their underlying indicators, right? Their methods, and they execute on it. Or it could be a team of traders that are coming to consensus together to form trades. So nothing wrong with by hand traders, but eventually they will be outdone by models like ML models. They're just better than at the end of the day. Part of our team is working on the core infra for the subnet. We will be launching more subnets. That's another thing. So that's why we have a 20-person team. Everything really what we're concentrating right now is around wealth management. We want to build out wealth management on Bittensor, really. So we have core subnet team. And then we have this translation team to our quants. So we have a quant team. The quant team is taking the strategies, building all these network model-based curated strategies for glitch. And then we have our glitch team. And the glitch team is building an enterprise SaaS platform. Individuals that don't really know trading, like they're not like traders, but they have interest in the world of financial markets and they're connected wealth managers. And they're like, hey, can I sign up and use this and bring a customer base? And yeah, it's like pretty much plug and play hedge fund for wealth managers. It's pretty outstanding for them. They just plug in their money, they plug in their clientele, right? They manage the accounts and, go from there. So they can have essentially sub accounts inside of Glitch Financial as a wealth manager.
Welcome to the Ventura Labs podcast. Today, we're joined by Arrash, the founder of Taoshi, the team behind the Proprietary Trading Network in the Bittensor ecosystem. We'll be discussing Taoshi's evolution, miner operations, and the development of Glitch Financial, a SaaS product built on top of their subnet outputs. Arrash will also share his insights on projects that have utilized their subnet, lessons learned from past experiences, and the role of miner performance, incentives, and machine learning in trading strategies. Now, back to Arrash with the 23rd Ventura Labs podcast.
Arrash, nice to get you on the podcast today. How are you doing?
Good. Thanks for having me, Grant.
Yeah, it's nice to finally meet you. This is the first time.
Yeah, I know.
Yeah,
we were just talking about that.
Yeah. Well, let's start with the history of Taoshi, which was initially not proprietary trading network. It was Bitcoin price prediction. You guys were one of the original 8 subnets, and you were still here over a year later. Let's go through the history of Taoshi.
Right. Yeah, I think it's a good starting point. Is kind of what we were doing before that. So we had founded Tarvis Labs, which was our proprietary trading strategy and really our company to execute that strategy. And we realized, the best way to create a strategy is not a singular strategy, or a singular team can only do so much. So it's kind of a culmination of many strategies put together, blended together, is going to be the best strategy possible. So, you could take years to develop your own strategy, but really you want to have a bunch of teams that are equivalent to you providing their strategy as well, and you can kind of blend it together. And so we built, with SNA initially, we built TSPS, the time series prediction subnet. Initially, our goal was to have it be all time series for Bittensor. However, that ended up being just too large of an effort. And we started with just Bitcoin price prediction. And initially, the idea was you have to predict over the next essentially hour time frame on a 5-minute interval, the price movement of Bitcoin. And the idea was all the miners were providing ML models competing to try to predict the price. So that was where we started, was this idea of, hey, let's try to get a bunch of different strategies, right? Different miners providing their models, unique models, to try and predict the price movement. And that is kind of how we can create this blended strategy. And so that was kind of how we started out with into the world of Bittensor.
And then why did you guys change to PTN, Proprietary Trading Network? What inspired that change?
Yeah, so I had a call with Jake one day, Const, and he said, we're going to introduce the idea of dTAO, and I think that was early-ish 2024, sorry. And my wheels started spinning, and I was thinking about, okay, commodities is going to be the play, and what's going to provide the biggest commodity? Essentially, how can we get create the most valuable output possible with our existing infrastructure that we have for scale to drive as much revenue as possible. That was the idea. And we realized while the time series prediction subnet was a great idea, the time to value and the ability to generate revenue would be faster with the proprietary trading network. So essentially, creating models and having them be accurate, especially over a lower time frame interval, is quite challenging. And so instead, we decided, why don't miners take their models that they're already creating and instead give us the end signal, essentially how they would actually trade on that using that model. And that was the idea behind Proprietary Trading Network. So it's a decentralized prop firm in a way, where miners compete and they provide us their trading strategies, and then they're judged on their performance. That was the basic idea of PTN to start. And really, it was the first of its kind decentralized prop firm. It never has existed before. So pretty cool.
Why would you say building a decentralized prop firm is something that's important to do?
Yeah, so there's a couple of things. One, if you've ever traded on a prop firm challenge or tried to join a prop firm, exclusivity is one challenge. Not all prop firms accept anybody. So just having access to be able to compete at a reasonable price is one big factor. And the second one is transparency. So while you're competing in various prop firm challenges, the way that the various things can happen on the challenges to undermine the trader to try to get them to lose. I mean, one of the big factors is the registration fee. So on prop firm challenges, typically you have collateral you have to deposit for $1,000, $2,000, $3,000. And prop firms mostly generate the revenue through collateral, not through the actual trader's performance. And so for us, we have no incentive to have traders fail. We don't recoup that registration fee on Bittensor. Our goal is to have traders succeed. And so the openness, the transparency of the source code, right, which is all open source, on how we judge miner performance, mixed with allowing anyone to join, the openness of it, and then the transparency. The fees, right? The fact that we're not collecting the collateral ourselves are all factors as to why this is a massive differentiator, why so many participants want to join.
So would you categorize PTN, Proprietary Trading Network, as a prop firm that is just no KYC, no know your customer?
Yeah, there's no KYC. Anybody can join. It really following the ethos of Bittensor, which is the openness, right? Anybody can join. Anybody can compete. Just spin up a miner and start competing. And since then, since the launch, there's a lot that's happened. We have a lot of avenues now for traders to make it easier for traders to come join and compete. So yeah, the whole idea here is to just allow anyone to come compete and have that and carry that ethos of Bittensor.
And so how would you describe what miners do on your subnet?
Yeah, so the commodity produced, essentially what we're creating is it's a data. The output is really like a lot of data on very performant strategies. So eventually, on PTN, on SN8, there's going to be thousands and thousands of trading strategies that have uniqueness. And all of the strategies are providing proper risk-adjusted returns. And when I say risk-adjusted returns, I'm saying, they're not taking wild swings using outstanding amounts of leverage to try to perform well, right? They're trying to increase certain ratios that show that they're able to appropriately use their funds or appropriately trade with their funds to minimize risk. So at the end of the day, it's really a data collection. That's what on SN8, and we're going to be gathering thousands and thousands of miners' outputs and grading them individually, competing against each other on a peer-to-peer basis to determine the output you can imagine being extremely powerful blended strategies.
And the inputs that create these outputs are miners sending long, short, or flat signals with X amount of leverage on specific trading pairs.
That's right. Yeah. So it's essentially mimicking a real trading environment, which is using, we are switching right now to a margin-based system. So, it's kind of like you're trading with like 100K. Okay, we have 100K to trade with. What amount of margin and leverage would you like to use on those trades? And then you have cross margin limits, right? So it acts like a real exchange. So the traders are sending in long, short, and then eventually flat, which is closing out the position orders. And maintaining their orders on various markets, on various pairs. So you can trade crypto, Forex, equities, commodities, and we're going to continue to expand that. So yeah, it's sending in as if you're trading on a real futures exchange or a spot margin exchange, and eventually even potentially spot itself.
And when you say margin limits, you're referring to, you guys have a cap. You have a theoretical portfolio for every miner, and they say this percent of the portfolio go long Bitcoin, for example. And when you say margin limit, you're saying the total amount of a portfolio they're allowed to use?
That's correct. So unlike, if you're using a real exchange, you could just flip on 100x leverage on one trade and blow your account at once. We don't allow for that. We understand the risk associated there. So we provide limitations to how much leverage a miner could use. And that also, so that they don't just blow their account. So, if you're trading and the limits of how much you can use on a per trade basis, it depends on the market you're trading. So if you're trading crypto, it's more volatile. So you have less, that you can put in a single trade. Meanwhile, in FX, right, the swings are tiny. So, you have more that you can use. So it's dependent on the market you're trading as well.
And you said miners are measured against risk-adjusted returns, right?
That's correct.
What are the specific metrics that you guys value the most at PTN?
So it's really a culmination of many metrics. Sharp, Sortino are pretty common ones. Calmer is another one. Omega. It's a bunch. We essentially use a blended model to determine, what is the best performing miner. Now there's a little bit of overlap between some of them, but overall it gives us a great picture as to, exactly how well the miner's performing when they do trade.
And models built on top of Taoshi in the past have had significant drawdowns, but the scoring system has been changed many times over the history of Taoshi. What ensures that the scoring system now, to where these models won't have significant drawdowns like in the past?
Yeah, I think at this point, we're pretty well developed. The competition is quite high, and it's very challenging to even get into the top 10 miners. We've made so many adjustments over time. Initially, we actually had it so that we weren't thinking as much about risk-adjusted returns. I think we had some Sharp, and then it was just kind of more mimicking a prop firm, and saying, let's see if we can maximize returns, right? More like a brute kind of brutish kind of system, which is like maximize returns, don't hit your drawdown limits. And we've kind of iterated so many times through 2024, and finally got to this system where you have this blended model of risk-adjusted returns to really define if a miner is doing well or not, based off of not just based off the returns, but is it proper risk-adjusted returns, and have they been doing it over time? So we've developed this challenge period, and in the challenge period, you have to perform your trades for 60 days. You essentially receive a small amount of dust incentive to keep you in the system to perform your trades in this challenge period. And then after 60 days, we've collected data on how you trade. And then over the next 30 days, we determine if you are capable of exiting the challenge period and joining the ranks of the top miners on the network. So if you're not within that 30-day period, which is essentially like a 90-day window of gathering data on you, we determine if you're performing enough to be part of our, PTN mining club. But if you're not good enough, you get deregistered, you get eliminated from the network. So it's really competitive. I mean, you have to do well in terms of risk-adjusted returns for quite a period of time, and then you have to be as competitive as the top miners on the network to stay on the network. So it's adjusted quite a bit from what we had before to ensure that only the best miners are staying around.
What is the hardest part of designing this scoring system to incentivize the actions you want from miners?
Yeah, it's quite challenging. We want to make it so for us, the biggest thing was ensuring that we keep this mantra of openness, because eventually we want thousands of participants. We don't want to limit anyone from being able to compete. And I think that gives us a massive edge because we can get signals from anybody, from anywhere, right? There's no limitation. There's no KYC to try to compete. And with that, we think that the performance of the network is going to be drastically improving over time, especially with this method of having registrants have a large period of monitoring before they join the network and compete. So yeah, I think over time it's just going to continue to get, stronger and stronger in terms of the output to ensure that, it's an ever evolving, strengthening system.
And with this ever evolving system, over the past a little more than a year now, what are the notable achievements that you would highlight for Taoshi?
Yeah, it's been a ride for sure. I think if you go to dashboard.taoshi.io, you can just see how good the miners have gotten. These are unbelievable Sharp ratios. These are unbelievable Sortino ratios. And what we're doing behind the scenes is, and we'll talk about glitch in a little bit, is we're mirroring the miners with trading accounts. And then we're determining how they do with live money. And so essentially we can say, how good is this system at actually trading? Do we feel confident in its results? And then we can continue to tune the incentive mechanism to make sure it aligns very strongly with real world results. So that's it's another pattern that I talk about with continuous improvement, right? When we look at anything in Bittensor, it's always about continuous improvement, up and to the right. So how do we continue to make it go up and to the right with our incentive mechanism? Well, it has to constantly be tuned. And the way that we built it is allowing anyone to compete. Well, we need to use the same methodology of creating these kind of pseudo exchanges that validators run, right? And that's just going to continue. That over the next quarter, you'll see just some major improvements into how we model real world data and incorporate that to compare our miners against each other. So the results are already good, and I think they're just, again, going to get better. And one of the cool things that we're looking into with EVM is allowing a single miner to potentially be 1,000 miners. So you can think of a single mining slot being something like, I don't know if looked into it yet, but there's a prop firm that actually launched on PTN as a miner, which is pretty cool. So they're called Delta Prop Shop. Phenomenal team. What they do is they white glove services for miners. So obviously not every miner is capable of understanding Bittensor's ins and outs and running a miner. It's like pretty overwhelming, even if we have really good readmes. So what they did was they're like, hey, why don't we just white glove services? Look, I mean, there's so many miners out there that just don't want to understand. They just want to trade, right? And so what they built was a UI to mirror the incentive mechanism of PTN and showcase how well the miner's performing against various metrics. And then essentially allow them to trade directly in the UI or plug in via an API. And they handle all the mining infrastructure, ensuring it executes the trades properly, all of that. And then they take a cut, right? So they're really a prop firm on top of PTN, which is pretty cool. But what eventually is going to happen is that's just one mining slot. So you can imagine like every mining slot being its own kind of prop firm. So with smart contracts, we believe we can do it. So we could have, 1,000 miners essentially take up one mining slot, providing us more data. And that would happen for every slot. So we don't, even if, we never expand beyond 256 slots per subnet, every mining slot could be its own prop firm, which is pretty powerful.
You spoke of the ups and downs over the years with PTN, or over the years, not years yet. But you guys have had as high as over 11% admissions one point, and you've had as low as 0.3% admissions at one point. How have you seen admissions being correlated to performance of the miners? Were the miners' performance that much better when you had 11% versus having 3% or 0.3%?
I think, in the current world, I think, validators are doing the best job they can. There's so many subnets. There's more launching. There's more competition. Trying to understand, what subnets should be valuable or valued at what is quite hard. I mean, I tried to create a community to help validators determine where emissions should go. And everyone has their own opinion, right? Like, it's really hard to determine. And so things can sway, right? Up, down, stay still. I mean, it just, even if there's great developments. So it's one of those things where right now it's kind of up in the air. And with dTAO, I think it's going to be a little bit more straightforward when it comes to what the value is. I think it's just the way that, I think it's one of those things that, Jake Kahn saw really early on, and why he thought we needed something like dTAO to have the market decide what the value is. So yeah, we've had some ups, we've had some downs, but I think right now we're pretty stable. Eventually it goes back to the mean, right?
How have you seen miner performance correlated to emissions?
I think so far, I would say it's been less on that, and it's been more about, are you growing your team? Are you trying to deliver what you're saying you're delivering, right? We've talked about how we want revenue. Like, that's, for us on S&A, like, that's something I've talked about a lot. I see that revenue is such an important and critical factor when it comes to dTAO. And for us, it's something that I believe strongly that we need to deliver, right? Like, as a team, I tell my team all the time, we have to deliver it. So it's been less about, it's more about the incentive mechanism and improving the incentive mechanism, which we've done. It's the improvements. I don't know if like the per miner performances is really what we've been judged on, rather than, hey, are you heading in the right direction here in terms of incentive? How are you thinking about incentive mechanism? Okay, now you have the 60-day challenge period and then the 30 days on top of that. Okay, now if you want to be a miner to actually compete in this network, you have to be really good, right? So it's been this continuous improvement that has been monitored. It's been the growth of the company. It's been things like Glitch Financial, which we will talk about, I'm sure, that we're building, right, to deliver revenue. These are the things that we're being judged on, because at the end of the day, improvements take time. It's not something that can be judged so instantaneously. Building the software, it's really impressive what I think what Fish has done with SN51 to get that off the ground and running. Building enterprise software for us on SN8 requires taking the data, building a true SaaS platform, and then getting customers on board, right? Which is not a process that's it's not a quick process. We can't just leverage the miners to perform the tasks for us for the output. We have to build another platform to take the data, right? Because the output is really data with time series. So you got to take the data, build the platform, then get the users on board, which takes time. So really, again, I go back to the fact that it's very hard for validators to determine emissions, because things take so much time and there's so much pressure to determine what is the best subnet, what are they doing that's differentiating right now. Right? I mean, it's a little bit of, and with crypto, things move so quickly that they want to assess what's the, there's the pressure of like, okay, are you properly providing emissions to these subnets? And so it's really about like having a sit down with the teams, understanding the founders and understanding what direction they're heading in. And is that the right direction? And are they working in the direction necessary for success for Bittensor? Because at the end of the day, like, are you doing something for TAO? That's really what's going to matter. And so that's kind of how I see it. And I think, again, I think validators have done quite a good job for the most part, for trying to figure that out. It's not easy.
Yeah, that's a concern or an opinion pretty much everyone now comes to in Bittensor, that validator's job is hard. That's why dTAO is upon us at this point.
It's not a scalable job too. It's not scalable.
Yeah, that's right. As subnets increase to infinity, that job becomes unattainable for someone to evaluate every single subnet and determine their emissions. The question I'm trying to ask is, when you saw a decrease in emissions, did you also see a decrease in the performance of miners? Is that correlation something you guys see?
Definitely a concern. We didn't see any, but you can imagine miners losing interest if there's not enough emissions, right? If they're not going to get paid enough, why would they continue to provide for us, especially when you're providing proprietary signals, it better have some value associated with it. So for us, very critical that we were able to go back to the mean, right, on the lower end, which was a concern for me, which I knew that it would get figured out, right? Like it would revert, but with dTAO, it's really important to think about that, right? That kind of opened what happens if your emissions drop? How are you going to pay your miners and make sure that they stick around when things get hard, right? Or do they just see the value in what you're building and they want more of your token? They don't care about getting paid and selling that token back to US dollar, right? To cover their costs. So definitely a big part, I think, with dTAO is going to be ensuring that you can get your miners paid, because that was a big concern that I had. So yeah, definitely.
And preparing for dTAO, you guys announced Glitch. This is your plan to generate revenue to return to the miners, independent of them selling the alpha token and gaining funds that way to continue trading. What is Glitch?
Yeah, so Glitch Financial, first, I wouldn't say that we're going to pay miners independently. Everything that we do will use our token. We are all bought. My entire company, Taoshi, is fully bought into dTAO, fully bought into Bittensor, and everything we do will be related to the token. That is number one. So, we'll have more that we talk about as we get a little bit closer to dTAO, but it's been a focal point. Like, again, we switched to PTN for dTAO, for the token. So, we'll talk more about that. Regarding Glitch Financial, what we essentially did, as I said, was built an enterprise SaaS platform. So typically enterprise SaaS platforms take 2 years to build, like 1 to 2 years, for a team to build that. We had already built a lot of infrastructure at Harvest Labs, and what we had to do was just continue to build on it, which was great. So pretty much getting that out the door. We think we started really building on it in May-ish. So 7, 8, 9, less than a year, right? Getting it to market is the idea. And what Glitch Financial is a way. I'll just quickly talk about the ethos behind it. So, decentralized prop firm, anybody can come and get these trading signals. We built the request network. You can literally just go buy the signals and you can build a trading bot or use it for yourself or however you want, right? These really sophisticated trading strategies. With that same ethos is applied to Glitch Financial. We didn't want to just go build a hedge fund, right? And be like, we're going to use these strategies and only give it to the select few and build the most sophisticated blended strategy possible. No, we want to allow as many people as possible access to trading strategies, because we understood from an ethos perspective that a lot of people are struggling. And we want to provide people a way to generate wealth. That was the idea behind it. We want to provide them an avenue that's reliable, with proper risk-adjusted returns, to have their a specific portfolio size compound over time. And so that was the idea behind Glitch Financial. So, as you probably know, there's been a lot of gimmicks when it comes to people selling trading strategies, especially if you've been in crypto. You've probably seen them all over the place, people selling their Telegram chats or groups or whatever, and the strategies are all horrible. And it's just to make a quick buck. Or they're just snake oil salesmen, right? And so the average retailer's really been kind of rude a bit in this manner. They don't get access to hedge funds. They can't get access to them. And the other avenue is, okay, I'm using these, if I'm looking for a legitimate product, I can't really find it, right? And then we saw this rise in, I think, probably partially because of it, this rise of this gambling mentality, right? Like, I need to make money somehow, and I want to make it. And so we've seen, it happened with GameStop. Everyone jumped into GameStop, price skyrocketed. It was kind of like the first meme, right? And then we saw that kind of transition into crypto a bit with meme coins, right? Meme coin craze. We've seen gambling go up a tremendous amount. It's been legalized in so many states. And so a lot of people are just trying to find, where's the opportunity for me to make some money? And so we want to provide kind of return back a bit from a gambling mentality. Like, we want to help people realize, hey, there's a smarter way to do this, and we want to try to bring it to you. And so that's kind of our mentality behind Glitch Financial is, allowing as many people or eventually everyone to be able to use this product for a reasonable price, starting with a low amount of allocation to build their wealth. And the output, what they are able to select from it are strategies built from PTN. So the output of PTN is directly put together into blended strategies. We have our own quant team at Taoshi, and they create these strategies and formulate them, and then they execute them in real time to our customer base for scale. And the execution layer is obviously very complex to scale to eventually hundreds of thousands of users, which we've built. So the goal here is to really scale this to allow anyone to use it and get access. And it's very mission driven from my perspective. Again, we could have easily launched a hedge fund, and we didn't want to do that. We wanted to release this to, we wanted to disrupt this industry, disrupt hedge funds. It's kind of in a way like an open hedge fund, but it's a SaaS model. So we only we charge a subscription based. It's subscription based.
With a subscription based product, how would that look like in practice? And then who is the target consumer of that? Is it the general public? Is it retail? Or is it these large hedge funds, institutions?
Yeah, we support. So the subscription model is tiered. So essentially based off of, it's a flat fee, but it's tiered based off of ranges. So if you want to trade with a lot of money, there is an associated fee, right? If you want to trade with less money, there's an associated fee, but it's all tiered pricing, just like a SaaS company. Now, while it is like we allow both sides, really, for like if wealth managers want to plug in and use it, they can bring their customer base, which has been really fascinating. We've had a lot of conversations with wealth managers, not necessarily hedge fund managers, but individuals that don't really know trading. Like they're not like traders, but they have interest in the world of financial markets, and they're connected wealth managers. And they're like, hey, can I sign up and use this and bring a customer base? And yeah, it's like pretty much plug and play hedge fund for wealth managers. It's pretty outstanding for them. They just plug in their money, they plug in their clientele, right? They manage the accounts and go from there. So they can have essentially sub accounts inside of Glitch Financial as a wealth manager. And again, it scales. And then on the retail side, any retailer can just come sign up. Eventually every retailer will be able to sign up. Initially, there will be a limit on countries just because that's regulations. Long term, anybody can sign up from anywhere, and they can just start with a small allocation and be a user and use similar strategies as a wealth manager is using to power their customer base. So that's the idea. Is again, disruption. I think our goal is to be kind of an open hedge fund, but on par with the top 1% of hedge funds in the world, private hedge funds.
This tiered system, would it operate the same as the tiers on the request network for Subnet 8, to where there'd be a low tier where you get access to 30% of the signals, and then a 50%, and then 100%? Is that how the tier system would work for Glitch?
No, it's just based off of how much you're trading with on your account. So say you're trading with $1,000, you'd be charged, $99 a month. If you're trading with $10,000, you'd be charged $199 a month. Same strategy. So it's just based off how much you want to trade with. Again, we're trying to be flexible, allow people to start with low minimums if they want, and then build up if they'd like to do that. But the tiered is just based off of their allocation, their portfolio amount that they're trading with.
And how do you track that?
It's through internal systems, because we can read from their accounts. So within Glitch, you take the strat. It's just very straightforward. Select your strategy, you choose your exchange, you connect your exchange, you're literally done. Notifications, dashboard, populating all the data, all available to you.
And when you say exchanges, you guys can plug into like a Binance, a Bybit, like those type of exchanges, or like a Robinhood, Interactive Brokers type exchanges?
One at a time. But yeah, I think we have some that we're starting with: Binance, Bybit, DYDX. We'll be adding more crypto exchanges for crypto-related strategies. And then for Forex, this is actually really impressive that we've done, but people probably won't understand fully. But we actually integrate fully with MetaTrader 5, which is unheard of, because MetaTrader 5 doesn't have APIs. So you can just choose any broker from MetaTrader 5. And from there you can, eventually you'll be able to choose any broker. and then it'll just auto run. So it really opens up to any, pretty much, if you're unfamiliar, like the brokers are like exchanges. So you can plug into so many from there. It's really limitless. MetaTrader 5 is like the gateway if you're into Forex. And then eventually in equities, Robinhood, it's going to be a big one. E-Trade, etc. The Fidelity, they will all be available.
It sounds like it will start out not available in the U.S.
That's correct. It's not available for those in the U.S. We need to abide by regulations. That's the most important thing for something like this, and ensure that we do things properly. So not in the U.S. to begin with, but our hope is, and what we're doing right now, is planning to get it into the U.S. in 2025. So it should be available. Hopefully by the time we're out of beta is the idea.
Do you think the new administration plays a role in
possibly? But their actions probably won't take into account until 2026, like realistically. So as much as I love it, we make sure that we're not bending, trying to work around anything. We want to play by the rules. So especially with something like this, there's no need to, right? Like we have such a powerful product. We want to get it in the hands of everyone, just one step at a time.
What are your thoughts on the murmurs of national Bitcoin reserve, national crypto reserves as a trader yourself, a wealth manager, you say?
I think it's really fascinating. I mean, I've believed in Bitcoin forever. I mean, I trade it, I'm a holder of it. It's, I think it's the most valuable pair that you can trade right now, especially on the long side. If there's a dip, just like start going after it, because that's what I believe. I think it's going to continue to go up. And whether the U.S. has its reserves or not, I think the stage is set for Bitcoin to be right there with rivaling gold. So I'm a big Bitcoin believer. I think I got into Bitcoin right when it topped at like $19,000 in 2017. So that was a great time to get into crypto and then just watch everything crash in 2018. But yeah, I mean, even when it was at 3K, during the COVID crash, I was buying. So, yeah, huge. I think crypto with the new administration, I think is going to have a lot of potential. I think Bittensor is going to have a lot of potential there. I think it's going to be really powerful. So it's going to be really interesting. I don't know if we're going to talk detail, but I'm a massive dTAO bull. So I think it's the most. I actually do believe this. I think it's the most pivotal change a cryptocurrency has done since I've been in crypto. Probably only other one that I can see rivaling it is probably when Binance released the smart chain. I think that was a really big thing. But I think I think it'll be similar. I think, just for context, I think Binance went up from $20 to $350 with BSC. So yeah, I don't know what's going to happen with TAO price, but I think it's a massive bullish catalyst for Bittensor.
Well, as you very well know, with getting into Bitcoin at 19K and then riding it back down to what, $3,000.
Yeah, that was crazy.
Crashes are part of financial markets, and that's just a reality of life. Markets go up and down. So getting back to Glitch, how does Glitch differentiate itself from other products that have been built by your partners on Subnet 8 in the past, like Timeless or dTAO?
Yeah, this is great question. So I think, there's Talbot Labs and Mixstar, great guys. I think they're a fantastic team. They're really starting to hit their stride, I think, actually. Like, they're really into Hyperliquid and creating, using the miners from SN8 if you haven't checked out Talbot Labs, absolutely check them out. I think, I think they've grown a lot over time and done a great job. They're very crypto focused. I think they're trying to get FX now on Hyperliquid, which is great. And I think I think they're coming back. I think Siruk and his team are going to be relaunching it, and I think it's going to be much more sophisticated now. So very excited for that. And then Timeless, we are close to Timeless. There are connection, and Timeless is going to be bringing on high net worth individuals essentially onto Glitch. So they are plugging directly in, and they're going to be helping, essentially be the first massive wealth manager. So if you're looking for a solution that provides proper risk-adjusted returns with something that's very strategies that are very sophisticated, Timeless are the people to reach out to.
Timeless, I can speak, has a great founder, great team there. So Trade with Dale specifically, I want to ask you about. This was a former partner of yours. I'm not sure your relationship with him now. We spoke a little bit previous to this about it, but they did suffer significant drawdowns of over 35% in the past. How can users be assured that Glitch does not have the same fate?
Yeah, it's an interesting one. Dale, it was kind of like we had launched PTN. We were looking for people that wanted to build, and so I knew Siruk, and a really brilliant guy, and he reached out, wanted to build, and Mixer was building as well. And I think it was just one of those cases where things moved so quickly, and it grew so fast, and I think that sometimes I think it was unexpected how fast it was growing. And I don't think, I think it just needed more attention. I think that was more of the problem. The miner itself, in that specific scenario, I think ended up suffering a 0.5% loss. So on PTN. So it was a minor loss, but I think it was just one of those things where infrastructure is really important for trading. This is why we built Glitch Financial. It's one of those things where you can get great trading signals, but if you're not executing them properly, it can lead to large losses, right? I mean, you're not executing well. So I think it's just one of the things. It was just Dale had just grown so quickly, and it was hard to just pour in the resources to fix issues that had popped up. That's why I'm excited for them to relaunch, because I think they're going to have a much more sophisticated product to deliver to market. So, Siruk is fantastic person. And this is one of those things where everyone got really excited about it, and I think I had 500,000 in assets under management at some point. Top trader on Bybit, and I think it was just one of those things where things just it got to market quickly, and I think at the same time what trading systems need attention, execution layers need attention, and it's hard to have it fully properly work all the time. So that's again why we also built Glitch Financial, because it's going to be built for scale, and it's kind of proper execution, and so we have a 20-person team working on it. It's hard to do. That's the reality. It's hard to do.
From over 500,000 assets under management at its peak to now not having made trades in 90 days. And this was a product that was built on top of the miners, using the miners of Subnet 8 at the time. Would you consider that a failure of the miners, or how would you categorize what happened there?
Again, I would say that it was just really fast growth and unexpected growth. I think he probably, I think that the Dale team probably just thought they had more time, they could iterate and grow the product and have it be better over, as the assets grew, they would provide more attention. I think it went from like 1,000 to 500,000 in like less than a week. It's hard to just ensure that everything works properly, again, for execution layers. So, again, it was not necessarily, it wasn't on the miner, but it wasn't like I don't think it was like a core PTN problem or something. But again, it just execution layers are hard to build, as I said. I think, and I'm really excited to see what they come back with. And it was just one of those things where he was one of the first people to launch a product off of PTN, driving revenue, right, in the entire Bittensor ecosystem, actually driving revenue. I think that he did a great job with that. But at the same time, things move quickly. It was a learning lesson for, I think, all of Bittensor. Like, things can move really fast. People get really excited about things being built on Bittensor, and it's just about quality of what's being built, right? Is a really important part. Getting to market is great, but with what quality, I think, is the second part of it.
And 35% is well below the drawdown threshold for miners. That is currently 10%, I believe.
Yeah, I mean, Right. Yeah. So ideally, the way that, again, how it works, I think they were following one miner. And I think the leverage was quite high. Like the multiplier of how, like the performance metrics was quite high. And then again, I think that miner in particular, when it looked, I think it had a 0.5% loss at the end of it. So it was a pretty low loss. The major component though is, when a miner starts performing poorly on PTN, their incentive drops very quickly. It's instantaneous. So if a miner starts doing so essentially what you can do is you can create a strategy simply off the incentive mechanism. Because the incentive mechanism, mission sum to one, right? So you can take the top miners or just the incentive completely of the miners, and then do a weighted, you essentially trade using their weight, of your portfolio. So, especially because that there's limits of how much they can trade with at a time. So the ideal strategy is something where it's blending the miner trades together into one strategy, right? It's using something called a network model. It's using the network overall with the incentive mechanism to determine how it performs its trades, and then it trades that way. And then no single miner or single trade would have that much of an impact. So yeah, I think honestly, Dale at this point is probably doing that. I think I saw that they were doing that, and that's why I said I'm really excited to see what they do, because they are following the network model approach.
Following this network model, do you guys have the metrics on what % of total miners have hit these drawdown limits to compare?
Hit the 10% drawdown limit?
Yeah.
I don't have that on top of my head, but we have an eliminated. We have an eliminated file, so we know all the miners that have been eliminated, and then deregistered. I'm not sure off the top of my head, but there's been so many miners trying to compete on PTN that just don't make it through. I think probably I'm just estimating. I think probably over 100 miners are in challenge phase right now, and only I think maybe 60-ish miners, maybe more than that. I'm not quite sure, but there's not a ton of miners that make it out of challenge. It's again very hard now, right? And with the new setup where you have a monitoring phase, and then you have to perform as well as the top miners to get out of challenge period, it's really hard to do. So you'd have to place in a percentile to exit and actually be among and receive decent incentive on PTN.
Yeah, to get out of the challenge period now, you guys have to hit the 75th percentile compared to the miners that are currently out of challenge period. And that's just to get out of the challenge period.
That's just to get out, yeah.
Going to the network model that you touched on there, you said you could do a strategy where you weight the miners by their weight of admissions on a subnet. You guys have commit reveal set to 24 hours. How does weight copying play a factor in that delay time? Because you wouldn't be able to update the model until 24 hours later if you do it based off the weight.
Yeah, so I think we're actually dropping that right now, but the historical data is not the same as real time. So we can use historical data to determine, performance and understand how miners doing, right? The whole idea is with real-time data. It's going to be more important. So being able to ensure you have high V trust means you have to be running your validator live, right? Because if all historical data is shared among validators, and then real-time data is what actually determines V trust. If you're not maintaining, you're not running a validator, and you're not, you're just weight copying, you'll never get that real-time data. So the real-time data is really what matters to ensure that you can maintain a high V trust score, which means that a validator has to run their validator properly as we expect them to, and not weight copy.
Yeah, if you guys are dropping the commit reveal for 24 hours, that becomes a different scenario. I guess moving ahead to dTAO, what are your thoughts on it in general?
Yeah, I'm very, very excited for dTAO. I think, we've been waiting for it, and I think, luckily, I think the timing of dTAO for us, in particular with S&A, coincides. It will coincide, I think, with the launch of Glitch Financial. So that'll be pretty awesome to see. for me, at high level, I think dTAO is transformative for Bittensor. I've been waiting. I've been in crypto for a long time, and I think what I've heard about Bittensor, one of the big things I was really excited about was these marketplaces, right? I learned about like Arrash network, and I was like, wow, Arrash network's really cool. Like this is like, I think that's really what these marketplaces of competition and providing a service is kind of the future, right? I think that's where a lot of value is to be unlocked in crypto. And then Bittensor came along and it was like, you can do this with anything. You just launch a subnet, you can provide a commodity, which was huge. But in order for Bittensor to ensure that the value is brought back to the holders, a market it has to be an open market of competition, so that one subnet is bringing in revenue and another, it puts pressure on the other subnets to bring in revenue. And the validators can't just be like, oh, I think this subnet is valuable. No, it's based off of the market dynamics. And so it's kind of like every subnet is going to be going public in a way. They need to provide guidelines. They're going to need to provide revenue projections. What does the future look like for them? And you can't really fib it, right? It's like the numbers are going to be there. Like, how are you interacting with your token? How does the value get back to the token? And all of that value back to the token could end up with a ton of locked TAO, right? Or distributed TAO among even more holders. So it's going to be really fascinating and really good for TAO, in my opinion, because every subnet's going to be competing to provide as much value back to their holders as possible. And if the initial subnets, the core subnets that initially launched on Bittensor, that have been around, and the companies that have been around, all commit to putting pressure on each other, it just increases the amount of pressure on the rest of the ecosystem 100-fold, right? I mean, to be able to launch a subnet, there's going to be a standard to launch a subnet and to compete as a subnet on Bittensor, which is going to be really cool to see. And so that's what I want to see. That's why I got excited about dTAO, because I know that we can, at Taoshi, can help drive it forward. We want to be part of that competition. We want to see it. And I think that's really important for every TAO holder. Why you should buy, not financial advice, but like why hold TAO? Well, because dTAO is going to be a competitive environment of real revenue, where subnets are competing to do that and to attract more attention from the Bittensor ecosystem to their subnet, right? So at the end of the day, it's going to be incredibly helpful for the price of TAO. I think at one point, Constantine said this, dTAO isn't good for miners, it's not good for validators, it's not good for subnet owners, it's good for Bittensor. And it's true, the subnets that kind of see that and see like how important revenue is and are able to drive that forward and have proper tokenomics. So you got to think about miner sell pressure. Okay, where is the miner's cost? How much are those miners costs, right? If you have extraordinary revenue, but your miner costs are extremely high, well, they're just pretty much offsetting at that point. Like they're going to have sell pressure equivalent, right? To cover their costs. Well, the best subnets are going to have low cost for their miners, but incredibly valuable output that is then driving revenue. And then it's up to the subnet to determine how are they going to tie that revenue back to their token and their holders. Because if they do nothing with the revenue and they house it for themselves, no one's going to take their token. There's no value proposition there. So it's going to be really interesting to see. I think the dynamics are what I'm really excited about. The tokenomics, kind of like the decision-making for why we built PTN, will be really interesting because the things I just talked about are big reasons why we launched PTN.
Do you see the structure of how you guys do things with dTAO changing? Do you plan on incorporating EVM to define relationships on chain between glitch and miners? Do you plan on using EVM to force miners to publish their strategy on a smart contract so it's a actual strategy and not someone trading by hand? Do you guys have any of these plans to change with dTAO?
There's actually nothing wrong with people trading by hand, in my opinion. I mean, I just think eventually it's going to be really hard for them to compete, right? I mean, if you're trading by hand, eventually you'll be outcompeted by ML models. It's just reality. It's an iteration, right? It's part of the ever-evolving process of building a system like this. So there's nothing wrong with by-hand traders. There's a lot of really good by-hand traders. They use underlying systems. They have their underlying indicators, right? Their methods, and they execute on it. Or it could be a team of traders that are coming to consensus together to form trades. So nothing wrong with by-hand traders. But eventually they will be outdone by models, like ML models. They're just better than at the end of the day. So Yeah, I mean, at the end of the day, like for us, like the EVM is really important. This idea of having every mining slot be its own kind of prop firm, that's brought to life by smart contracts. That's something we're looking into. We are looking into this idea of collateral rather than registration fee. So it actually aligns more with prop firm challenges in a certain way, because registration fee is pretty harsh. You need to lose it. With collateral, you have a deposit. You can regain it if you pass a challenge period, which is more friendly. Economically, it makes more sense. So that's another thing that we're really looking into. So, and then looking into some things like this idea of a capacitor feature. So, making so that the validators all kind of put the emissions to miners in a smart contract, and the emissions are not distributed to the miners unless they're hitting specific performance metrics. So rather than having it be purely peer-to-peer, you can now have it be based off of, hey, are you hitting specific performance metrics, risk-adjusted return metrics to receive emissions? And if you're not, you don't receive them. So it's not like all emissions are always distributed. It's like a column that.
Yeah, you stopped. Yeah, I can hear you. It gave me a notice that said Arrash has stopped recording. Something went wrong. They're not. Everyone else is.
Hey, can you hear me now?
Yeah. You should be good.
Okay.
You should be good.
Okay.
It just said you needed to rejoin.
Okay. Sorry about that.
Yeah, we're still rolling.
Okay,
I'll just
cool.
clip that. Actually, I probably won't even clip it because it was so short. But
okay, cool. Yeah. I was gonna say, what was I saying? Smart contracts, right? So, this idea of a capacitor feature is essentially making so that it builds up the emissions over time, and if you're not performing well enough, you don't even receive emissions if you're a miner competing. So it gets harder and harder to even get emissions of our token. So we're looking at the smart contract and using the EVM in multiple ways. Those are the top three.
What is your sales pitch to get someone to come mine on Subnet 8? Because if they're a good trader, why wouldn't they just, if no KYC was their concern, just download MEXC, make a MEXC account, go trade there if they're such a good trader?
Yeah. So the number one reason why, well, it's just like any prop firm, right? So the reason why you go do a prop firm challenge is because you don't have funding. I mean, good traders have really two options. Like when we had Harvest Labs, we had really two options of how we want to approach it. One was, do we want to go create a hedge fund, right? Or do we want to do prop firm challenges to get funding, right? So there's two avenues. And so if you don't have funding or you don't want to use your own funds for trading, you can go to a prop firm challenge to get funding to trade with. And you take home X% of it, and they take home Y% of it, right? And if you want to go the hedge fund route, well, that's going to take a ton of infrastructure. You're going to have to go build a hedge fund. You're going to have to bring on your clientele. You're probably not a wealth manager, so you're going to have to work with wealth managers. So a lot of infrastructure, and then very costly to build a proper hedge fund. So most traders, they come to this, once they built their strategy, they come to this fork, right? Like, what do I do? And so with PTN, we can attract really talented traders with the incentive mechanism, right? If you perform well, you get paid extremely well, right? And at the end of the day, it's really on us with Glitch Financial. And this is a really big piece of detail. Does your subnet have a plan to outpace the miner emissions with the revenue you're generating? Because if you're able to, essentially the revenue from the output outweighs the payments to the miners. And if that happens, that is a massive balance that swings in the favor of the holders. So that's the major driving force, right? So the miners get paid out. They get paid out well, right? They're paid out extremely well, and they don't have a way to get that funding unless they take that fork, right? One of those two paths. And we think that we can pay them more than any prop firm challenge could. And it's more along the lines if they had launched their own hedge fund and gotten quite a bit of funding. And so instead of going through all that work to go launch a hedge fund, just come compete on PTN and get paid very well. And that's the pitch.
So the target miner wouldn't be the guys that work at those top hedge funds, wouldn't be the guys that have their own personal huge books. You guys believe the best traders in the world are the ones that don't necessarily have the capital and trading is a skill that is not determined by the amount of capital you have. Am I understanding that?
Yeah, I don't believe that a trading skill is associated with the amount of capital you have. That's absolutely right. Because especially with the new world with ML, we're just going to see it iterate faster and faster. You think that PhD candidates have access to millions of dollars? They absolutely don't. So research teams are going to be the ones that come up with new ways to build trading strategies that are really sophisticated. They don't necessarily have access to hedge fund kind of money. So I don't believe those two are related. You know, and I think that's kind of the way path forward, right? Like you're going to see machine learning continue to get better and better at tackling this problem of time series prediction. So the best strategies will develop from probably research groups that aren't considering creating they will come to that fork, right? Do I create a hedge fund? Do I compete on PTN?
Why would a top research group or top model, back tested, not just approach one of these large hedge funds like Bridgewater Associates or something, present with what they created rather than launching on PTN?
Yeah, I mean they could, but also they're giving up their IP. I mean, they're giving up their entire strategy and how they built it. With PTN, they're not doing that. They're just providing the signal, and they can stop whenever they want, and they still get paid really well. So they maintain their IP. We're not taking their IP to provide the signals. So if they want to keep it and eventually go launch a hedge fund, they could, right? Say they're providing signals to us, they get a ton of funding because they do so well. We're happy because it's provided us great service to their clients that end up using the output of PTN. They could eventually turn around and go launch their own hedge fund, right? They could go do that. And so that's it'll be really interesting. I don't know how it's going to unfold. Maybe top miners circulate out. Maybe they're happy with how much their teams are making, and they stay in. It'll be interesting to see. I do know that some of the mining groups I've talked to on PTN are entire research teams. So we're already seeing this happen. They're usually a culmination of ML scientists and actual traders, and they form teams and they compete as a miner, and the traders kind of own the actual trades, and the ML team forms the signal. So I think we're going to continue to see that grow, and it'll be fascinating to see if there's churn, right? Did we see the top miners just stop providing a signal one day? It would be something that would be really interesting, but they're in their place. There would be more competition, right? It would go like, there's going to be little dips in the road, and it'll just keep going up to the right.
That's an interesting idea. You think the top miners may have churn because they come on PTN as a proof of concept for their model and then present that to the Bridgewater Associates of the world. And
just go launch your own thing. Or just go launch your own thing. Yeah.
Okay.
I would assume they would go launch their own thing. I mean, if they're entrepreneurial, I mean, I would assume so. But it could be, it could be one of those things. It could be like
a lot of these top models, these people that design them, have concerns of alpha decay if they put their models out there. They say their signals can be reverse engineered. How do you guys counter that?
I mean, alpha decay is definitely a thing. I would say there's got to be constant iteration. Like you can't just sit still on your strategy. And also alpha decay is over time. So it takes quite a bit of time to try and reverse engineer strategy. And as they get more complex, it gets more difficult to reverse engineer. So all those things considered, I would say, it's something where the miners need to get better. The system itself is going to get harder to compete in. So just resting on a strategy is not going to work very well. You should be iterating on it. And so those are going to be new miners introduced. And so you're just going to kind of in the way of Bittensor, things will constantly get more competitive and harder to compete in on PTN, and especially with the way we've set it up. And I think the second part of that, which is great for Glitch Financial or any product that's building off of it, is the miners get better and better, and then alpha decay is not really a problem because there's new miners taking the top spots, right? You're going to have new strategies introduced constantly. So that ends up playing out in the product.
It seems like then you don't believe there's just, one guy or one strategy that is the best trader forever.
That would be really hard to believe. That's hard for me to believe, at least. especially with the fact that machine learning or AI is increasing at such a rapid pace. I think, the best by hand trader will be outproduced by the top AI model pretty quickly. Like if they went head to head, I don't think they'd be able to compete. So, I think that the path forward for trading signals and trading strategies is going to be ML based. Like and that's an iterative process. It's going to just get better and better, right? That's something that's really fascinating. Actually, is this idea we talked about internally at Taoshi is how can we fuel that research, right? Like how can we fuel the research of time series models and time series model performances to improve the signal generation on our subnet? That's something we're very fascinated in. There's going to be some things that we talk about around that, but it's an interesting area to be in, because I think, look, I mean, if you can create a money machine, a money printer, it's pretty enticing. I mean, I don't know how else to put it, right? It's pretty exciting stuff, and you want to just make that money printer better and better over time, and that's kind of what we're trying to do. I mean, obviously, doing it's extremely hard. It's it's the hardest thing to do, but that's our goal.
I think it would be really interesting if you guys explored some type of EVM deployment of the model. So it's basically a black box on EVM. I think that could be very interesting for you guys to pursue there. And you talk about Taoshi talking internally. You guys have a 20-person team. I don't know if everyone realizes that, but a 20-person team is, as we spoke before, is a very large team in Bittensor standards. How does your team contribute to the success of Taoshi, to the success of Glitch? Why is such a large team necessary for what you guys are trying to achieve?
Yeah, so, part of our team is working on the core infra for the subnet. We will be launching more subnets. That's another thing. So that's why we have a 20-person team. Everything really what we're concentrating right now is around wealth management. We want to build out wealth management on Bittensor, really. So really, that's our major concentration. So really, we have core subnet team. And then we have this translation team to our quants. So we have a quant team. The quant team is taking the strategies, building our kind of these network model-based curated strategies for Glitch. And then we have our Glitch team. And the Glitch team is building an enterprise SaaS platform. So that's going to take resources. So they're all, there's multiple layers here. And then with a SaaS platform, you have to have, support. You have marketing, you have biz dev, right? There's all sorts of things to build out just a SaaS platform. So you'll see us continue to hire. I mean, we're not even close to done hiring. I mean, you've got to build this to scale, right? We want to take, for us, Glitch Financial is a multi-billion-dollar product. So you can see that there's going to be some interplay between the two, either our token and the subnet and Glitch Financial. So that's kind of how we see it. This is a massive opportunity, and this is where we want to concentrate our attention. And it does require a 20-person team to scale, right? And we have to keep doing it. We have to keep growing.
And not to just gloss over that we have more subnets coming. Is there announcements coming in Taoshi's future?
There's we have more things that we think are incredibly valuable that we want to bring to Bittensor. There's ways, there's just more products that more commodities we think that need to be launched, right? That should be launched, that should exist, that are incredibly valuable. So and it's all really related to wealth management, interplaying into things like Glitch Financial, right? So just it all is a flywheel, right? Like they all interchange, right? So we want to build this out. We want to build it for Bittensor. And we think there's incredible value there.
Yeah, and you had mentioned the different segments of Taoshi. Is Request Network something that's still on your guys' horizon? Is that still something you guys work on, or is what's going on with Request Network?
So we built it and we simply maintain it. I mean, we're not really further developing it. I mean, it was already done. I mean, you can just go to our website. You can go buy the signals, and it's provided by, I think, Roundtable 21 right now. No other validator signed up. So what we did was we open sourced all of our work. So the front end, the back end, all of it's open source. So any subnet can choose to go launch their own request network. We initially thought that we would host all the subnets on the request network. But then we realized that would be a central point of failure, like centralizing everything. So we realized that's probably not the best approach. Instead, every subnet owner can just go take, all the infra and go launch it for their own subnet, and then allow validators to sign up and sell. And there's contracts. We've already put together contracts in there. There's like legal documentation. Like there's all sorts of stuff in there that we did for the ecosystem. So anybody can choose to go do it to sell the data, right? For their subnet if they want.
Yeah. Shout out Adam. Shout out Roundtable 21.
Yeah. They're awesome.
Yeah. Do you think the reason you didn't see the mass adoption was because everyone was concerned of it being a centralized point of control?
Good question. With the world of dTAO, I'm just not even sure what the request network is going to look like. It's going to be interesting. Do all the validators want to keep the data for themselves? Like what is it? I don't know. I think it's a little different world, right? Validators had to validate on every subnet. We wanted to create a way for all of them to plug in and monetize off that. But the world of dTAO, it's going to be interesting. Like it's mostly the subnet owner is going to be their own validator. And do they want to, do they want to sell the data, or do they want to build their own thing? Like, it'll be interesting. I think that had a big piece of adoption. It's also a big piece of infrastructure. I mean, it's not like some small thing. I mean, you have to launch the server, you have to maintain the server, you have to get people on board. Maybe subnets just didn't want to do that. Like, I'm not quite sure.
Yeah. Detail, a lot will change, a lot's unknown. The future's uncertain, but we all believe the future will be better than it currently is. So that's why we all want dTAO to come, it seems like.
Absolutely.
I'll wrap it up with this. You have been known for pushing subnets need to make revenue, build products. What advice do you have for subnet builders, subnets, people that want to build products on top of Bittensor subnets? What advice do you have for those people?
I think there's going to be a massive opportunity. Like we're seeing subnets come alive, and not everyone's going to be a subnet owner. And maybe the commodities kind of build out, and they're really powerful, right? And so there's going to be a really big opportunity to build on top of subnets. I think that's coming. Not just subnets, but on top of them, which is using the output and selling it. Like we saw with Delta Prop Shop, they built a single miner. They built a prop firm and plugged it as a miner, and now they're profiting. Right? They have miners that are placing out of the challenge period. Right? They bring on their own miners. They go source their own miners, and they have them come compete on PTN, and they make a cut of whatever the miners make. Right? So they are building a business that's not a subnet, right? And they're profiting. So I think there's going to be a lot more opportunity to build around the ecosystem, like a Glitch Financial, right? To take things to market. That's going to come about, and I think that's going to be a really big opportunity. So I think if anyone's looking to build, I would say subnet ownership is it's going to be very challenging to compete in. I think it's going to get harder and harder. There's a lot of opportunities, but I think it's like the emergence of the internet. It's like you kind of try to create something unique, and most of them aren't going to be good. It's going to be hard to compete in for attention, and to get, you're competing with some very talented teams that are building on Bittensor. But there's going to be a huge opportunity, I think, taking the output and selling, like to create it to a real product. I think that's going to be a really interesting play. And that's really where we were really concentrated on, I think, with Glitch Financial, was, okay, how can we take the value of this output and really drive revenue with it? It just so happened we're also the subnet owner. Like we wanted to build it the way that we did so that we could build the product we wanted. And it'll be interesting to see people start building more products on top of Bittensor. I think that's going to be the next big innovation.
Arrash, thank you for coming on the pod today. It was good chatting with you. Thank you.
Thanks, Grant. Yeah, this is great. Thank you so much.